Good morning, everyone. We'll call the March 1st, 2016 meeting of the Jackson City Council to order. And we'll call on Councilman Johnny Dodd for the invocation and pledge. If you would, please rise.
If I could ask Mr. Ronald Benton, Pastor at Mount Moriah, you please come up.
Good morning, everyone.
Good morning.
Let us bow. Master, we thank you again for this day. A day that we've never seen before, and a day that we'll never see again. We understand and realize it's by your grace and your mercy. Not because we've been so good, but because you've been so good. You've been kind to us. We're asking now that you keep us in perfect peace as we take care of the business of the city of Jackson. Bless each individual person here standing as well as collective. And then at the same time, bless the people that's in charge of this country. Let their minds be stayed on you, so that we'll be in perfect peace. We thank you again, and it's in Jesus' name, and we say our prayer, that every heart say amen.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Anita, I think you can show all council members present. Item 4 is approval of minutes of the February 2nd, 2016 City Council meeting, and unless there are any corrections or additions, no objection to council, we'll go ahead and adopt those minutes as submitted to you. Item 5 is the invitation for public comment. If there's any item under new business that any member of the audience wants to address the council, if you'll let me know at that time, I'll be happy to call on you. We have no proclamations, no recognitions this morning. So we'll go to first readings. Item 7 is consideration of an ordinance to amend, modify the municipal code relative to business, peddlers, and solicitors. Title 9, Chapter 1, Section 9-104 of the Jackson Municipal Code as it relates to licenses for solicitors. Karen, you want to handle that for us, please?
This is, as I shared with you at Agenda Review on Thursday night, this is a change that we're making as far as the limitation of the number of days for a solicitor permit. This will help us to better regulate the door-to-door people that go into our neighborhoods. We also have a whole new application where we get a lot more information. They'll also have a permit with their photograph on it, description of the vehicle that they will be driving as they go to door, and this information will be sent to the Jackson Police Department to better help us to regulate the solicitors.
Okay, thank you, Karen. Any questions from council?
Has there been a problem?
Yes, to some extent. Sometimes we are not sure who's out there. Some have not gotten the proper permit. And then, of course, the way that it was 365 days. This will limit it to 180. So it will cut back on the time and we'll have better regulations. The permit did not obtain all the information that we will now require, which will better help us to get a handle on this and get the information to the police department.
And of course, Karen, this doesn't apply to our school children that are selling things,
ma'am.
our politicians that
No.
are going just
No, it
strictly
does not apply to
business
those at all.
and-
This is strictly solicitors for profit.
Okay.
Move for approval.
Second.
Okay, we have a motion for approval
Second.
and a second.
Thank you.
Okay, this is, before we vote, this is a revision to ordinance on first reading, so let's open a public hearing and see if there's anyone here who'd like to speak in support of or in opposition to the passage of this ordinance, the amendment. Hearing none, I'll close the public hearing. We have a motion and a second. Council, please vote.
The vote is unanimous.
Item 8 is second readings. We have none under new business. Item 9 is presentation of the audit report by Alexander Thompson and Arnold, PLLC, by Mike Hewitt, John Wybrew, and Matt Wood. Gentlemen, come on up. Good morning.
Good morning.
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 Appreciate you all getting us so early in your agenda. I was telling Karen that I delivered an audit report to another client last month, and I was the second item on the agenda. And about an hour and a half into the meeting, they got to me. Okay. Y'all have had your the audit report for a while. Hopefully you've had a chance to go through it. What we're going to do today is just cover some of the highlights. We've got a PowerPoint that you can see, and I think we also printed it out so you can look at it. This is not actually our report, but it just sort of covers some of the highlights of the report, and we'll go through it. You all have an audit because one is required by the state. It's not anything you can avoid. It's state law says you have to have one, but more than that, it's really a good business practice to have an audit. Also, you have an audit because you receive more than $500,000 in federal funding, and there is an audit requirement that goes along with the receipt of that funding. And some smaller municipalities avoid that depending on how much federal funding they get. The city has always come under that law. And that threshold next year raises to $750,000, but you'll still be within the threshold. So that will probably always apply to the city. Okay. We're going to cover three things this morning, or sort of talk about what the purpose of an audit is and what our responsibility is, and also then to go over the results of your last audit. The purpose of an audit is to provide assurance that you all, management of the city, have presented a true and fair view of the financial position and results of operations of the city. That is, your financial statements, that they are accurate. Plus, it allows a certain degree of confidence to be attached to the financial statements. Because once an outsider's looked at them, they are looked at with a little bit more confidence that they are correct. And also, the thing that we like to view as the purpose of an audit is to help you out. An audit is more than just us coming along and saying, here's what you did wrong. We do have to do that, but our goal is to help you improve the way you do things and to provide you some insights into maybe better ways to operate the city and on your financial policies. Okay, our responsibility is to plan the audit to make sure that we have some reasonable assurance. And reasonable assurance is sometimes misunderstood. We don't look at everything. We would love to look at everything and send you the bill for that, and it would be a much larger bill than you all would want to pay. So we do it on a test basis. We do it statistically, so it's sound. But we don't look at every last bill that you pay, at every last dollar of revenue that you collect. And it's our responsibility to express an opinion on the financial statements, and in doing so, as we're doing this, comply with our professional standards. One note I will make here is there's also a responsibility that if you read our report, it starts off with management's responsibility, and your responsibility is these financial statements. We help you all by drafting the statements, but they're not our financial statements. And oftentimes when I'm doing this, somebody will ask a question and they'll say, your financial statements, and I'll always correct them and say, no, they're not mine. They're not mine. They're yours. We may have drafted them for you, but they're still yours. Okay, as far as our audit results, the audit report, if you read that, it is what we call an unqualified clean opinion, which means the financial statements are a fair representation of the financial condition and the results of operations of the city for the last fiscal year. We take 3 pages to say that, which I apologize for, but it's Matt and I don't write the rules on that. Okay, we did have one internal control finding, which we will get to here in just a few minutes. Okay, as far as the actual results, you all get 2 sets of financial statements within one. One is called the government-wide financial statements, which are on the accrual basis. It has all your capital assets in it. You record depreciation on your capital assets. Now, those are not the statements that y'all are used to seeing every month. What you see every month is on the modified accrual basis of accounting, and it's just the fund financial statements, and it leaves out the capital assets as far as reporting them as assets. That's the biggest difference. On the government-wide statements, your total assets and deferred outflows are $219 million as compared to $207 million from the previous year. That $12 million increase was $1.7 million of that was increase in capital assets, and $9 million of it was an increase in deferred outflows of resources related to a new pronouncement for accounting. Now, I will use this opportunity to tell you that these financial statements do include the effects of the adoption of the Governmental Accounting Standards Board Statement 68, which deals with pensions. It was a rather large, quite impactful pronouncement. And in just another slide or two, I'll get to what impact it had on you all. It did have a significant impact. Okay, your liabilities and deferred inflows, June 30, 2015, $152 million. June 30, 2014, $116 million. And here's where the impact of GASB Statement 68 is. That's a pretty sizable increase in your liabilities for the year. And the reason for that is now for the first time ever on your statement of position as a liability, you're showing your full pension liability that you all have for your unfunded pensions. It was a rather large number for you all, about $24 million. Now, I don't want to mislead you and make it sound like that came up in the last year. You've always had that liability. It just has not been on the face of the financial statements. And the GASB, which makes the rules, they, in all their wisdom, they decided, if it's a liability and the money is eventually owed to someone, and who it's owed to, it's not money that y'all borrowed in the public debt market. It's money that is owed to your current retirees and future retirees. We might as well show it on the face of the financial statements and take it out of the notes, which is where it was before. So again, that is not a new liability. Okay, if you'll flip over to the next slide there. The unrestricted net position, and again, this is on the accrual basis, is a negative $846,000. This is the funds on the statement of net assets, or a statement of net position that you have to spend, and it's actually in the hole. Previous year, it was $22 million, and your first question is, well, what made that change? It's $23 million. Well, the change is the pension liability. When you recorded the beginning pension liability as of July 1, 2014, the way you recorded that was you figured up the liability as of that date and took it out of your net position. So that's why your net position went from $22 million down to almost unrestricted net position down to almost zero. The total net position, which includes your investment in your capital assets, went from $90 million at June 30, 2014 to $67 million at June 30, 2015. And again, that change was primarily due to recording your pension liability.
Excuse me, I have a quick question, if I
Yes.
may, and you may have explained it, but what's the rationale for capturing the pension like this?
Well,
Is that
I
not simple?
won't tell you I agree with it, but the
Well,
guys
I
up
won't ask
in
your
Connecticut,
opinion then, just,
the guys up in Connecticut that make the rules, the discussion was, and
Sure they did.
this is not unique to governmental. The private sector went to this reporting the pension liability probably a decade ago. So this is, while this is new to governmental, it's really the governmental sector following the private sector. The rationale is when you do an actuarial study and actuaries determine what, as of today, giving your current employment and your past retirees and what you owe them. If you just drew a line today and said, we're gonna fund our pension obligation, or we're gonna record our pension obligation for everybody we would have an obligation to now, here's what the number would be. So it is liability. Now, does that mean it's anything that you have to pay this next year? No. You'll pay a part of it this next year, but as you always have done. It's just the powers that be that make the rules just decided they wanted to see that on the face of your financial statements.
Okay.
And again, like I said, it was following the private sector.
Mike, could this potentially affect our bond rating?
The bond rating agencies say no.
Okay.
And you'll see when we get to the fund financial statements, it doesn't affect your fund balance. This is just on the accrual basis where when you include on your balance sheet all of the capital assets and all of your liabilities. This liability is so large that effectively zeroed out what you had that was unrestricted.
If I could put a rosy thing on it, if this was on June 30, 14, you're welcome. If this was on June 30, 14, you're $11 million better June 30, 15 related to it than you were the year before. It's net investment income and everything affects it, and it's really sitting in the hands of TCRS, Tennessee Consolidated Retirement System. And if you want interesting reading sometime, page 77 of your audit report shows the change from last year to this year. You're $11 million better related to net pension liability than you were last year. So.
Yeah, I will say that your pension's in good hands. The TCRS is probably one of the better run pension systems in the country. If we were in Illinois, I think you'd have a reason to be nervous. But the state does a good job of looking after that. And the previous year, which this is all driven by numbers from the 13-14 year, their investment performance was just amazing. And that's one of the reasons, as Matt said, that the pension liability actually went down during the last fiscal year.
Mike, if we're talking about existing retirees and future retirees, and how long they would receive that pension, I'd like to get to know the one person up close and personal on who determines when we die after retirement.
Those professionals are called actuaries, and I don't begin to understand how they do what they do. It's,
Mike, if I could ask you a question, you were saying that we went down 11 million between this, over one year. That's a 30% of the pension liability.
Yeah. You had net
Surely there was something else besides just they did good with their investments to cause that to reduce.
net investment income was 21.4 million. Yeah.
No, that's what it is. And actually, I wish you all had a pension asset. We've got some clients that are in the TCRS that in the previous fiscal year, they flipped from having a pension liability to a pension asset. And in essence, their pension, because of the investment performance, their pension plan was overfunded. Now, will that continue? Who knows? It could flip back the other way this next year. But it's, at least for the year that we're talking about, the state did a tremendous job with the investments. Anyway, now, is this anything to worry about? And Scott, that gets back to your question, is affecting the bond rating? No. Y'all make the same contribution to the retirement plan you've always made every month. That's not going to change. There is a new state law that took effect July 1 of 2014 that addressed funding for pension plans, and it had nothing to do with cities like the city of Jackson. It dealt mainly with a handful of municipalities and governmental agencies that were not funding their pension correctly. And it's forcing them to do what they should have been doing. But as far as the city's concerned, y'all have always put in what you need to put in. And even though you have this liability now sitting on the face of your financial statements, it really doesn't change the way you manage from month to month and year to year, and the way you budget. you'll still put the same amount in the pension plan.
I have one other question, if you don't mind. Pension liability now is 23.79 million or whatever. If that goes up 10 million next year, is that gonna show on our face of our financial statements as far as a expense item? Or is that, how's that reflected?
It would be, not only the change in deferred outflows and inflows, so it would be captured some in the balance sheet, but there would be a government-wide expense. It would not be on the fund level spread between the funds. It would be on page 19 through 21 of this year's, the government-wide statement. It would be spread by department level because we allocate that that's allocated based on the departments and your current year pension expense. We allocate the spread of that liability the same as the allocation of the pension contribution. So it would be an expense, but it would not be the whole change. It would be
Would
spread.
that be something we should budget for?
No.
No.
No, this is all on the
I
government-wide
didn't think so.
statements, which you all do not budget that. You budget at the fund level, so. There's really, even though it sounds kind of shocking, it's, all you're doing is moving a number, a big number, but moving a number that was disclosed in the notes to your financial statements as an obligation that the city had. You're just moving it onto the face of the balance sheet as a liability. And that's why it's not going to affect your bond rating, because the financial analysts already knew about it. That's something that when they got your financial statements, in the past, they went to and looked at it and they said, what's their pension liability? So all it's doing is moving a number that you already, or an obligation you already had that was disclosed in the notes onto the face of the financial statements. So it doesn't really change how you govern the city or how you budget for your pension obligation. But we're spending this much time talking about it because when you first look at it, it's a little bit of a shock to all of a sudden see what it does to your net position. Okay. Now, if you'll go to the next slide, we'll get down to looking at what you all normally see, which is the fund level financial statements. Your general fund, the assets for the year were ended at 49 million, which is just slightly under the year before. The year before you ended at just over 50 million. That $1.6 million increase, most of that was made up by a decrease in cash and a decrease in receivables on grants of 500,000, and an increase in intergovernmental receivables, which is mostly money that's due to you all from the state of Tennessee. Okay, your liabilities and deferred inflows, those were just about the same. 28.9 million at June 30, 2015, and 29.4 million at June 30, 2014. So just a very small change there. Okay. Next slide, your general fund balance. At June 30, 2015, 19.86 million. At June 30, 2014, 20.96 million. So you drop just over $1 million. The general fund had revenues of 63 million, expenditures of 62 million, and $2 million transfers out. Most of that was transfers to other funds within the city, which your expenditures and transfers out then totaled 64 million, which resulted in the $1 million decrease. Okay, in the next slide there, all of the other funds in the aggregate have about $15 million in assets, just over $3 million in liabilities, and fund balances of $4.7 million. Just under $23 million in revenues and $30 million in expense. Now, don't let that differential between the revenues and expenditures cause you any concern. One of the funds that's in that group is your capital projects fund, which, depending on when you borrow money and when you all spend money, that fund can show a significant deficit for the year, because typically the pattern is usually that you borrow some money, and then over the next 2 or 3 years, you spend that on capital projects. Okay, anybody have any more questions? We've been asking some good ones.
On your recommendations, on the potential budget overruns, I noticed a lot in CDBG. Why do we have so many in there? and
Okay.
What action do we need to take? You said council needs to take action?
Well, we had some discussion with them. That's a good question. Just yesterday, and we're going to change that finding. The overruns at the Community Development Department, there was, I won't call it an error, but a discrepancy between the total budget and what you all had in the individual line items. But the total budget covered that. So we're going to make a change on that and reissue that section of the report. So that will take care of the overruns at the 3 community development funds. Now, you did have some small budget overruns with the drug fund and also within one department of the city. You know, that's, if you have to have a finding, that's probably the best one to have. When we see budget overruns, we do look very closely at the minutes to make sure that you all have had some discussion of what causes those overruns, even if you maybe didn't actually approve a budget amendment to cover it, and you all did. I mean, we didn't see anything that made us think that you all weren't aware of where the money was, expenditures were going. As far as you know, how to prevent that, and I will compliment you, is that you all usually do a very good job on your budget amendments. Really much better than most of our clients. We have some clients who, at the end of the year, do this cleanup budget amendment that sort of covers all the past sins of the year, and which we really don't like to see. And you all, because we see them in your minutes. In fact, I think you have one today. You all do a very good job of keeping up with that during the year, and when you see that you're going to have an overrun, you actually approve it, which is what you're supposed to do. Anyway, that covers the one finding I think that we had. Does that address your question?
Yes, and then the CDBG money, 500,000, anything above that, you say next year be 750,000?
Well, any federal funds that you all
Yeah.
get, which CDBG is a part of that, but you do get other federal funds. So, yeah, it's, what we do, it's called a single audit. Y'all have always had one as long as I've been doing your audit, because your federal funding level has always been over the threshold. When you read the typical federal grant, there's a list of things as long as you earn that you gotta comply with. We don't test all of those, because not all of them affect your financial statements, but we are required under our contract to test compliance on your larger programs with those compliance requirements, as the ones that might have an impact on your financial statements, and give an opinion as to whether or not you've complied or not. So that's what we do, and 500,000 is the threshold. Now, the community development funds are a part of that, but you do have other funds. You typically get some transportation funds. You typically get some grants that are used for law enforcement that originate with the federal government. So it's more, there's more to that aspect of our audit than just looking at the community development department.
The city of Jackson had 3.8 million this past year, so 750 is still going to be a wide gap. So.
Okay.
Yeah, you all will probably always be subject to the single audit requirements. Like I said, it was raised in this coming year to 750. OMB wanted that to be higher. They were going for a million or $1.5 million. And in the discussion a couple of years ago about changing that, I'm not sure what the discussion was that brought it down, but anyway, they did not go as high as they wanted to on that threshold.
You said something in your report about the CRA's money.
The CRA's money? Well, we do audit them. They are a component unit of the city. If you look on page 19, you'll notice, if you got your audit report, there's the primary government, which is everything you all have responsibility over. And then you have two component units, one of which is Jackson Energy Authority. And they're a component unit, not because they're a legal part of the city, but because you all guarantee their debt. And the Community Redevelopment Agency is a component unit of the city also. And one of the controlling factors on that is you all have loaned them money to get as a stimulus for their project. And that's what pulls them in as a component unit. But we do that as a separate audit. And my recollection of that audit was that they had a clean audit this year. Had no issues.
Thank you.
Okay. We did issue a separate management letter that had a couple of items in it. These are items that are less important, so they don't rise to the level of a formal finding. One of those was on your sales of capital assets. When you auction off capital assets, you need to be sure that you keep sufficient details of what actually is being sold so that your people that maintain your capital asset records know what to take off. I think they had a little issue with that this last year. And the other comment and recommendation we had was on your solid waste collection fund. I know this is a much debated fund. I'm glad I wasn't here a month ago to deliver the audit report. You all, state law restricts, and I think this was a question some of you had during that discussion. State law restricts money that you collect for solid waste management, and it has to be used for solid waste management. You can't use it for anything else. I know in the past that was sometimes the case. The law was somewhat unclear, and a couple of years ago,
Can
the
you say that a little
comptroller's
louder?
office.
Repeat that
Yeah.
If he didn't say it
We
loud.
want everybody to hear that.
Well, a couple of years ago, the comptroller's office clarified it and said it is restricted. I'll be the first one to say, I wish they would change that, but, we are obligated to audit with the law as it's interpreted for us by the comptroller's office. And when I went back and read their reasoning for it, honestly, based on the way the law is written, I think it's a reasonable, you'd have to actually have a change in the Tennessee code to unrestrict it, which is possible, but it's got to originate with the legislature. Anyway, you all do allocate some indirect cost. You take some of the overhead of managing the city that does pertain to managing the solid waste collection and management activities and charge that to the solid waste collection fund, which is fine. It's appropriate. I wish the law was very specific about what kind of overhead you could charge to the solid waste management fund. It's not. To contrast it to the State Street Aid Fund guidelines, they're very specific. The law itself says what you can and can't spend money on. For instance, you cannot spend State Street Aid money on administration. You got to spend it on direct costs that are somehow spent on the right of way of city streets. The law on what you can spend solid waste fund money on is not as specific. And you all allocated about $650,000 of overhead to the solid waste fund. And our recommendation is that you reach out to the Tennessee Department of Environment and Conservation, who kind of oversees this, and get some guidance from them on what you can cover as indirect cost, on how they think it ought to be done, because honestly, the law is silent on it right now. And I will tell you, y'all are somewhat in a minority. There are not too many municipalities that have the extra money to cover indirect costs out of their solid waste collection. Most of them just cover their direct cost of collecting solid waste. So that's why there's not a lot of specific other examples out there of how to do it. And I believe you all have requested some guidance from TDEC. I saw a letter that, requesting that. Whether they'll respond to you or respond quickly, I don't know. You might have to follow up and ask them again. Anyway, that's kind of a long explanation. I apologize we took so long. Any other questions?
Any questions of council on any part of the audit?
No question for the council, I don't think. But let me ask, do you think this mayor and this council and this financial team, administrative staff of this city is doing a great job, or a significant job with respect to financial responsibility?
That's a loaded question.
You don't have to answer.
No, you all do a good job. You've got a good fund balance. Your fund balance in the general fund has drifted down over the last couple of years. You need to watch that. There are municipalities in the state of Tennessee who have run continued deficit budgets year after year after year, whose fund balance is not so healthy.
Well, it's something good to hear, Mayor.
Yeah.
Thank you.
No, y'all do a good job. We enjoy working with your staff, working on your audit. It's a kind of sort of a long process, start to finish, but they're excellent to work with, and we enjoy working with them. They do a good job.
Thank you.
Thank you.
Thank you, guys. Appreciate
thank you.
that. And let me just indicate this, that our Department of Budget, Finance, and Audit, is very, very vigilant in making sure we dot all the i's, cross all the t's, and that's Ms. Bell's area, and we appreciate her for bringing in this type of audit report, and also people in the recorder's office, and then also Sam Dawson, who turned 81 today.
Oh, my goodness.
We appreciate their efforts, and thank you guys for you. Okay, item 2. On new business, donation request from Jackson Madison County General Hospital, security for 8 bulletproof vests from the Jackson Police Department.
So moved.
We have a
Second.
motion and a second. Discussion from council. Council, please vote.
And the vote is unanimous.
Item 3 is consideration of board appointments for the Ned McWhorter West Tennessee Cultural Arts Center Board. The reappointment of the following: Jerry Gay, Lyda K. Faree, Glenda Baker, and Wes Hensley.
Move for approval.
Second.
Motion made and second. Discussion. Council, please vote.
And the vote is unanimous.
And we do have some budget amendments. Ms. Bell?
We do. Good morning again. We have 4 budget amendments on the agenda this month. The first one is to move funds from the police drug fund and also some insurance recovery monies for purchase of a police car in the administration division in the amount of $30,000. No draw on fund balance is required for this.
So moved. Second.
Have a motion and a second. Discussion. Council, please vote.
And the vote is unanimous.
Okay, the second amendment that we have is also a budget amendment for the purchase of a police car in the administration division in the amount of $30,000. Funds were received from insurance recovery for some other damaged total vehicles. This is a transfer of $30,000 from the general fund to capital, no draw on fund balance.
So moved.
Second.
Motion, second. Discussion. Council, please vote.
And the vote is unanimous.
The third amendment that we have before you today is a budget amendment for the Civic Center for repairs to the stage lift that needs to be repaired prior to the Miss Tennessee pageant in the amount of $145,000. This will require a draw on fund balance.
Move the approval.
Have a
Second.
motion and a second. Discussion. Council, please vote.
And the vote is unanimous.
The fourth amendment that we have today is for the Jackson Ballpark in the amount of $20,000 to complete the netting on the right and left field side. The prior amendment of $4,800 that was done a couple months ago was to cover the A&E costs. This will require a draw on fund balance.
So moved.
Have a motion and a second. Discussion. Just a matter of discussion. That is a safety factor which is currently being mandated by professional baseball in all the ballparks, including the Southern League, which is part that we're in, for protection of the fans. Any other discussion? Council, please vote.
And the vote passes unanimously.
Thank you.
Mayor,
Yes.
we'd like to point out, make sure our auditors know that we're doing budget amendments today.
And council hires of those, I want you to know, always confirm that we have to do that every meeting, but they're good to do it. Okay, consideration, last item, consideration of invoices over $10,000.
Second.
I have a second. Discussion, council, please vote.
And the vote is unanimous.
There being no further business, meeting is adjourned.
Charles.